Hey, what's up, everyone? I just wanted to share with you guys a trade I had done on Friday. I'm a net seller of options, so basically what that means is, I sell puts and calls, and I'm basically placing a bet that the stock will not breach that price. And if I'm correct within a certain time frame, then I get to profit. So basically, I like to sell puts where there is demand, and I like to sell calls where there is supply. And I like to make sure that I see some proof before I sell it. So I'm just gonna share with you guys what I mean by that. So here is WYNN, ticker WYNN. And so what I did here is I noticed that there was some buyers that were stepping up around the $63 price range. So this is the 15-minute time frame, and so if you look here, here it hit about $63.66, and it bounced up. Then it came back down to $63.42, bounced up. Here, there was a pretty big drop because there was a drop in the market as well around the same time. It went all the way down to $62.83, but it bounced right back up. And so in the next time when it came down to $63.11, and I sold a put credit spread that expired the same day. So here, if you look at this candle, the way it formed, the low of that candle was $63.11, but it closed green. So what that tells me is that, similar to in the previous instances, there were buyers that continued to buy the stock. And so that's why, they were able to push the price up. And so it closed, around the $63.48. So what I did here is I sold the $63 puts, and then I bought the $61 puts, and it credited my account $20 a contract. So if you sell 10 of these contracts, you get credited 200 bucks. And similar to the previous times, every time it had touched around that $63 level, it bounced right back up. So each of these candles represents 15 minutes. So in the next 15 minutes after I had sold it, the price went up to $63.82, and then in the 15 minutes right after that, it went up to $64.32. And the put credit spread that I had originally sold for $20 a contract had gone down to $5 a contract. So I had profited 75% of the total profit that I could on each of my contracts that I had sold. So I closed right here. If you look at what the stock continued to do after, especially in this market where it's a bear market, I recommend, just in general, but especially in kind of volatile markets like this, to take your profits earlier when you're selling options. So what I did was I closed out the entire position right here. So I still took, I closed it around like $6 a contract or whatever. So about 70% of the total profits. If you had held on to the contracts, right, and you wanted to take 100% of your total profits, you would have had to sit through this decline right here, which kind of coincided with a decline in the markets around the same time. Even though the stock closed at $63.04, you would have profited the full amount. There's a lot of stress that goes into that, and if you look at this last candle here, right when the market closed, it did go down to $62.91, and then in the after hours it kind of bounced back up. To me, that's just not worth it to sit through that strain and that pressure. I would much rather kind of close out the contracts up here earlier on this nice bounce, and so I don't have to stress out like this last 2 hours. And what I like to do is, like, I I prefer to look at multiple time frames. So this chart right here that you're looking at is the 15-minute time frame, and then the one right below it is the daily time frame. So if you look at the daily time frame, at the time where I had sold these $63 puts, the stock was basically at the 20 period moving average, which, not always, but it can be, a place where buyers like to step up. So basically, there could be demand there. And so I like that alignment between the smaller period time frame, which is the 15-minute chart that I'm looking at up here, and the daily time frame. So I like that alignment. The stock had given me confirmation that there were buyers, in the past as you look at these long tails. So what that means is the stock tried to come down, but buyers pushed the price all the way back up, and they did it multiple times. And so that's why when the stock gave me an opportunity to, sell puts, below these tails, I was able to do that. So I like that time frame alignment, and I was able to close out the position within like 30, 40 minutes at, around 70 to 75% of the total max profit. So this was a trade that I made on Friday on WYNN, and I hope to post more of these trades going forward. So if you like this type of content, definitely like and subscribe to this channel, and talk to you guys soon.